Helima Croft with us with Barclays, and you have this wonderful synthesis of Middle East political economics and oil. First of all, the history in Egypt. Here's the FT. Egypt elects Islamist leader. What does Saudi Arabia think of this outcome this weekend?
This is not the outcome the Saudis would have wanted. The Saudis clearly wished Hosni Mubarak was still there. I think they'd be more comfortable with a military regime. But what everyone was fearing in Egypt, though, if they came out and announced for Ahmed Shafiq, if they clearly had rigged those elections, you could have seen a lot more violence and instability in Egypt. So I think we all dodged a bullet with the military's announcement.
An engineering degree from the University of Southern California, a PhD, a number of Mr. Morsi's children born in the United States. This seems to be a more Western individual than many of the other Middle East leaders. What's so bad about this for oil and for the Saudis?
Well, you know, from the Saudi standpoint, I mean, they don't like the Muslim Brotherhood because they guess it's a challenge to their rule. They're ruled by monarchies in the region. So they don't want that type of alternative for their own kingdom. They want to have power decreed by God. And the Brotherhood's power is decreed by the ballot box. So that's a little bit different. They don't want democracy in the Middle East. But the thing about Morsi for us is, you're right, he's a Western-educated engineer. And the Brotherhood's been doing a lot to try to emphasize the fact that they are a moderate Islamist party.
Are they?
Well, if you take them at face value, they look like they're more like the AKP in Turkey. However, look
at this video. This is just remarkable. What did you take away from the pageantry of the weekend in Cairo?
Oh, and I would just breathe a sigh of relief. I was watching it at Heathrow Airport yesterday. A number of people were watching it. And the concern was, if they had come out yesterday and declared for Shafiq, everyone was afraid that all those people in Tahrir Square that had gathered, you would see potentially chaos. And so chaos quickly turned to euphoria. But really, we were on the knife edge yesterday.
That. What a great banner. Croft, chaos averted.
Chaos
Helima Croft
euphoria.
with us from Barclays. Helima Croft from Barclays as we look at oil. Sarah?
What does this election result do to the overall tensions as they relate to oil in the Middle East? I'm looking at Iran specifically.
Well, you know, one bullet we dodged was the concern if we had had violence in Egypt, there would have been concern about potentially problems on shipping lanes. Everyone would have said, oh my gosh, are we going to see problems with Egypt, problems with the Nile? And we've averted that. But it does put focus now back on Iran. We look at the fact that the Moscow meetings did not produce any outcome that would ease tensions. We're going into a lower level meeting on July 3rd in Istanbul to try to clear up some of these issues. But really, once the market refocuses on the Iranian nuclear negotiations, the EU oil embargo, they're going to see that we've made no progress on this issue.
So why isn't that being reflected in the price of oil? It seems like nobody's paying attention.
I think everyone is so focused on the situation in Europe, questions about China. They're not focused on Iran.
Well, excuse me, your oil call is non-consensus.
Aye.
Discuss.
Well, again, I think it's based on, we look at the supply situation. Of course, we have issues about, we think it's going to be a softer landing in China, Europe. But when we go back to supply side, we say there are a couple of issues that really we think means the prices are going to be elevated by the end of the year. Principally Saudi Arabia. You have a situation where the Saudis have put more barrels on the market. That's one of the reasons why I think people are pretty complacent about prices. However, Saudi does have a higher floor price now than they did a couple of years ago. Throughout the year, you have the Saudi oil minister say 100, 100, 100. And when we look at the Saudi domestic spending, their defense spending, we think at a certain point they'll probably come back into the market, remove barrels, and they will try to push prices back up.
Okay, here we are, folks, with the 2008 collapse in oil. Here's this huge trading range we've been. In Helima, we roll over. Did we roll over because there's too much supply, or did we roll over because the demand's gone away?
I think right now it's a combination.
It's Microeconomics Monday, excuse me.
It's really concerns about Europe. It's a concern about global recession. Also, I think the fact that the Iranian nuclear issue seemingly went away, I think that took a lot out of the price this year. But if you look at it, once they went back to talking, everyone believed we're going to have a soft landing on the Iran situation. But they're not paying attention to the details, and that's where the problem emerges.
The details of Europe. Did you speak with your Julian Callow about your response to Mr. Soros and Union and Confederation?
Well, again, when I was talking about the details, actually, I was putting it, again, more on the supply side. I mean, we really think this is where the problems are going to get back into the story. Because we're going to have a situation when we look at the EU oil embargo, where, you know, most people say 300,000 barrels. We've already priced that in. But we're going to add basically another 500,000 off the market in Europe come July 1. We're not going to be able to remove significant quantities to Asia because of the shipping sanctions. So we think that's where the market's not really getting into the details, or not adequately adding up.
What's your oil call then?
Our call still for the end of the year is 121 Brent.
121 Brent, we're at 90 now. That's a huge move. What will be the catalyst for that move?
I think Saudi is what you really do want to watch. And you want to watch all the OPEC players. Because, yes, Saudi can run down their reserves. They've avoided the big unrest of the Arab Spring, but they've done it by spending a lot of money. But some of their key allies within OPEC are pushing, I think, for higher prices.
Is the Middle East engaged in the European discussion? Does Qatar or the UAE or the Saudis, do they even follow the ballet we're following in Europe?
Well, it becomes a very important issue in terms of what they want for price, because what the Saudis don't want to do is have prices so high they contribute to a global recession and choke off demand. So they're always balancing what's going on in the consuming nations versus what they need for their own domestic economy. So it's a careful balancing act. It's not always perfect.
You and I were looking at the FT subsection on Turkey. We never talk enough about Turkey. Is Turkey in the Middle East?
Well, Turkey, I think, is the new power of the Middle East. I mean, people talk about the new Ottoman Empire because the Arab Spring has really benefited Turkey. They have come out and essentially said, we are the model. We are the model of democracy. You can be an Islamist government, but you can still stick to your democratic principles. And Turkish commerce tends to follow their political views.
Can Egypt be another Turkey if we have an engineer from the University of Southern California?
That's what we hope. I mean, we hope. And Erdogan has gone to Egypt. He's urged the Muslim Brotherhood to be like the AKP in Turkey. When I saw a Muslim Brotherhood delegation come through in the spring, they really talked about wanting to be the Turkish model. And so I think that's what's hopeful about Turkey, and that's also what terrifies countries like Saudi Arabia, is you do have a viable alternative to having autocratic regimes.
Well, Helima, let me ask you about Mohamed Morsi, the new president of Egypt. Is he going to be much more than a figurehead? The military still holds a lot of the power.
That is the million-dollar question, because essentially you've got the presidency, but potentially no power. And that's why everyone was so terrified about Egypt last week, because essentially it looked like a soft coup. You had parliament dissolved, you had the military basically reinstate martial law, they now have control over the budget, all security matters. So the question is, you may get the presidency, but if you have no power, is there going to be a clash between the Muslim Brotherhood and the presidency?
If he has a million-dollar question, I'll just ask a $10,000 question. When you fold all this into the economics of the moment, the stock market of the moment, why do we care about the geopolitics of the Eastern Mediterranean?
Well, you care because of issues like the Suez Canal. So again, if you had real problems in Egypt, all of a sudden we would have been talking about security of Suez. That's what everyone was talking about when you had Hosni Mubarak. All the questions were, is Suez safe? Is shipping at risk? Now, if you had problems in Egypt, the concern about the broader Middle East being unstable, and that reflects into oil prices.
Sarah, I know you want to jump in here. Dumb question of the moment. Greatest scene in Lawrence of Arabia. They're in the desert. They're at that rundown, beat-up house.
Music.
And they come over the hill, da-da, da-da-da-da,
Thank you.
and there's the Suez Canal. Does it still look like that today?
Well, you're going to kill me, but I've never seen Lawrence of Arabia. So.
You've never seen?
That's
a break exclusive.
I know.
That's a break exclusive. Croft has never seen Lawrence of Arabia. Are you kidding me?
I'm going to go watch it tonight.
Oh, my God, you're in the surveillance timeout chair.
I know. I'm the naughty chair.
Well, of course we're focused, and all of this is important for the Middle East, but the truth is, as we look to American oil and gas production, that's a game changer. I mean, do we need to care as much about this stuff?
That is a great question, because all the optimism is with shale oil, with the Canadian oil sands, with Gulf of Mexico, we're not going to be dependent on the Middle East. I think that's really an incorrect assumption, because at the end of the day, it's a globally traded product. The Middle East matters for price. So yes, we can get more supplies at home, but if you have outages in the Middle East...
In other words, we're not energy independent yet.
No, and also when people are very optimistic about North American finds, a lot of things are going to have to go right. Like, we're going to get more production out of Mexico. To get more production out of Mexico, international oil companies are going to have to go in there and book reserves. That will require constitutional change in Mexico.
Okay, well, let's look at this chart. This chart goes back to when David Lean made Lawrence of Arabia. Folks, it is the price of oil. And you can see the gift that we had in the 50s and 60s. And then we had OPEC 1, OPEC 2, Persian Gulf, down we go, and up we go. You have an out-of-consensus call on oil. Most of our viewers and listeners agree with you. They don't trust it's going to stay low? I want you to review again, why is oil going higher?
Again, we look at the supply and demand fundamentals. We look at the situation in China. Chinese growth has slowed, but it remains in positive territory. We believe, this is Julian Calley you mentioned earlier,
sure.
We believe it's going to be a softer landing for Europe, so we don't think we're going to go into this global recession. And so when we look at the supply side, we say this is where the problems are. We have a situation.
But when? When does it heat up again?
July 1, we are essentially going to be taking all Iranian exports to Europe off the market.
Who replaces that? Libya?
Libya is replacing it, but the question is, the Saudis have boosted their production, but at a certain point, we're down to that small spare capacity margin.
Can North Dakota replace it?
North Dakota goes to the United States. North Dakota is not going to be replacing the loss of Iranian barrels into the European market. And you have to look at other countries that potentially feed Europe, and you say, do we have a potential problem? I look at Libya and say, okay, back to pre-war production, but their militias are still running all over the place.
Do you realize 87% of North Dakota is seen Lawrence of Arabia?
Oh, what about Ohio? Ohio's a big producer.
I got to go watch Lawrence of Arabia.
Yeah, that's the takeaway from this interview. Ohio's the producer. I mean, one thing that I haven't heard you say is I haven't heard you talk about the market pressures, the dollar, central banks. All of this factors into the way crude oil and Brent trades as well.
It does, but again, I mean, our view at Barclays is we really are a shop that looks at supply and demand. We are a fundamental shop, and we know when we look at a situation and we say OPEC still has considerable market power. So when the decisions are made in Riyadh, like let's go back to 2009 and we look at the recovery of prices. I went to Saudi Arabia in 2009 when oil prices had crashed. Some oil analysts were like, Saudi's fine, they can run down their reserves, bankrupt Iran.
But they didn't.
They didn't. They took 4 million barrels off the market. They said they wanted 75, and they acted to get 75.
Thank you so much. I'm kidding about Lawrence Arabia. Helima Croft with Barclays.